Mario here. Hey guys, what's going on? It's Mario here. Guys, listen, I hope you're having a good week and a good year and a good month trading, guys. Listen, you guys are doing the same thing for the past few years, guys. Listen, we can help with that, guys. We do have a free group and we try to get everyone to become better as a trader in our perfect community. Okay, take a look at this, guys. So look, this video is a little bit different today. Okay, so this is how to spot fake outs, which means, fake breakouts, fake pattern breakouts, and really just how to spot patterns that may or may not fake you out, and then so you don't get stopped out on the trade, and then later, 2 minutes later, it goes in your direction, and then boom, starts making money. So guys, listen, this video is not how to identify them, but going over how you can react to them and going over how you can react with your position sizing and with everything you do with your position. So basically how to get a better entry, how to not get stopped out, and just how to look out for them. Okay, here we're looking at Tesla stock right here, right? Okay, guys, take a look at this. I'm going to show you guys a lot of examples. Okay, so let's go back to February 16th. Now, why this one? Well, there's no particular reason, but these are the most 5 recent examples that I can find. And guys, we're talking about like a few days ago. Like not from a year ago where all these other people will show you patterns, but no. This is from like 1 week ago. Okay, guys, look at this. Okay, so we're looking at the 5-minute chart on Tesla. Guys, listen, fake outs happen on like pretty much almost every single stock, So it's very important to keep this in mind. And guys, this goes for any time frame, right? So like even if you trade the middle or the end of the day or the beginning, which is the open of the day, guys, this goes for everything and it means the same way. Okay, take a look at this. Okay, so look on the 5-minute, we can see that in the pre-market hours, we're forming this triangle pattern right here. And then look at this. So basically, look, a lot of different things happen here, right? But look, let's go on the 1 minute to kind of look at it with a better view. Okay, now we're here. So look what happened. Look what happened. Okay, so look what happened right here. Market open, boom, and the Tesla dropped a couple dollars down to 198 from 201 and a half. And look what happened, right? We ended up pulling back up and retesting this top trend line. And then what happened after that? We ended up aggressively, like very, very aggressively, like selling back down. I mean, geez, like just look at these red candlesticks right here. Wow, look at these red ones. Like barely leaving like any wick, full body candlestick right there. Okay, basically what Tesla did today, well, what Tesla did on this day was a break and retest. So basically it was like this, right? So broke down, boom, pulled back up and retested, and then boom, later continued down to the downside as it was before. Now guys, not every day you're going to see this, but like you're going to see like pretty often, it's almost every day. So now guys, could we say that this was a fake breakout right here? Could we really say it? And then like this was the move up? Well, we actually don't know, right? Or maybe like we could just assume that, hey, look, or maybe this was the real breakdown and then maybe let's try to get the people out of it. And then here was the real sell-off, right? So guys, listen. So really, on this day, there really wasn't, much of a fake breakout to try and stop people out. But this is what we could say. Look at this. We can see this triangle pattern forming right here. And now look, once we got a break to the downside, that's around like $3 movement if you got in the trade, right when it broke out. Or maybe it was a $2 move for you, right? But look at this. Then it pulled back up and it retested this trend line, right? Because it wanted to get all the short sellers out of it. And then the real money would come in right there. Right, guys? Look, you see, guys, these big red candlesticks right here? Boom, 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 boom. These are like the institutions, like selling their shares, and this is how they make money. Guys, so these are those big orders that you see. And like, that's why, because like with momentum, boom, so you got big orders and then plus momentum, here's the stocks continuing. And then, so all the put options just start getting value and then you start getting a lot of money. So look at this. Can we say this was a fake breakdown? Maybe. But this was kind of, like a pretty big move to get a big breakdown. So anyways, okay, so look. let's just take for example. Okay, so in this video, so we're gonna really learn about how to not get stopped out in fake outs. Okay, so look at this right here. Look, this is not the best example, but take a look at this, guys. You guys are gonna see many different ways on how stocks get faked out and how to and how to spot them, right? Now, guys, not every fake out or not every breakout's gonna look the same. So check this one out, right? We didn't really get a close over this top trend line, but look what happened. The wick moved above it. And guys, look, most people, what they do is, they enter calls right when the thing breaks out above their trend line or above a certain level. Now, guys, this is actually not even the best way to enter on your trade, right? Because actually this gives you like the most risk. And because it comes with the most risk, you're really going to have to, you might have to take a loss soon, and you're going to be stopped out pretty quick, and you're not going to get a good entry, and your profit might be a little bit small because of your entry. Okay, take a look at this. So look, it's because we got this wick move over this trend line. Look at this. As you can see, we didn't even get a couple candlesticks that held over the trend line to make sure that we continued up, right? So look, it's not like this happened right here. So look, it's not like this happened right here, right? Where we moved above right there, went back down, we kind of held above this trend line, and then boom, we continued up like that. Did that happen? No. This did not happen, right? So, look, when you're in this trade, look, you can see that the next candlestick didn't hold above the trend line, right? So you can see that the sellers push it down very aggressively, and because we haven't got above the trend line yet, this could mean that there's a chance for it to sell back down. Why? Because just like I said, we didn't get above the trend line, maybe hold it for a few minutes and then pop back up, right? So how to identify fake breakouts is to see the opposite of this. So this is what I mean. So with fake breakouts, what they usually do is, so they move it up above the trend line or the price level, however many cents or dollars. And then usually what happens is that, within a couple minutes or maybe within the same minute, what happens is that, look, it pulls right back down, right below that level or line that we just pulled back up into and broke out of. And then look at this, it starts to hold below it. And then this is what kind of, pretty much happened here. Right here, we started getting buyers because we got a very small breakout. Boom, pulled back down, started holding right below the trend line, and then boom, look at this. A wave of sellers will start pushing in on this big red candlestick, and then boom, we start pushing down to the downside, and that's kind of what happens, So it's very important to understand the candlesticks and just your price levels and your trend line. Okay, so one thing we could have kept in mind right here is, look at this. We held below this trend line, and so look, if we went above this trend line, then we probably would have got like a real breakout, and then it probably would have done something like this, right? So like it would have kept going, maybe pull back and, retested this level right here, and then, held like that, maybe a little more sideways action, and then we would have probably kept going to the upside like that. Okay, so that would be called a break and retest. Now, so like breaks and retest are something like that I would really use when trading, right? Because the break and retest strategy is my favorite strategy. So like, for example, break and retest. Well, look at this. As we can see, so when Tesla broke this key level right here, this 201.40 level, right? So look, we knew that was support. And then look what happened. Look, so from the top right here, when we retested that trend line, look, we came back down right here. And look at that. We pulled back up and we retested that 201.4 level. And then look what happened. We broke it, retested it, and look what happened. We pulled it right back down and continued selling off. Okay, guys, so look, a break and retest will always do something like this. Check this out. So look, with the stock you have, okay, so with the stock you have like a certain level or a certain trend line. Let's use this 208.5 for example. Let's say the stock is trading above it like this, right? Okay, and then look at this. We come down to this trend line right here, but instead of just coming down, we actually go way past it and we end up breaking it. Okay, and then what happens next? So this is the breaking part, and then what happens next is that usually, guys, and not all the time, but like this happens often, right? We will pull back into that level or that trend line, and then what will happen is we will retest it right here, and then we'll continue back in the other direction right here. So this is called the break and retest. This can go both ways, towards the upside or towards the downside. Really, this happens pretty often. And so look, let's go back to our example from today, right? Look at this. We knew that this level was a support, right? We knew that this level was a previous support. And then look at this. It turned into the next resistance, which was right here, right? So look, so as we can tell, it turned into a resistance right here. So what happened? Look at this. We broke down again below that level, and then we pulled back into it, retested it, and then boom, we continued very hard to the downside. So guys, break and retest can give you a good entry as well, right? So this is how you want to get good entries, is by using the break and retest level. So watch this. Here, look. Let's just take a look at this, right? So what we're going to do right now is look. Let's just imagine that, that we did take this trade, but we used the break and retest strategy, okay? So what we would do is, look, we would wait till Tesla broke this level right here. Okay, so look at this. Tesla broke down this level right here, and look, we hit $200.64, right? Now, look, we would wait for Tesla to pull back up into this trend line and see if we got some rejection momentum right there, right? And we were getting some. Now look how far we pulled up. We pulled up to that level like earlier, that 201.4 level, right? So imagine if you got into puts right there instead of right here. You were getting a way better entry, and then look what happened. Break, retest, and pull back down to the downside, and then you get a good trade right there. And then here along you would take profits. Okay, now let's look into the next day example, which was the day after this day. Now, guys, remember, these are going to be many different examples, and it's very important to look through all the examples. Okay, so right here, so look at this. You can see in the pre-market hours, we had this gap right here, right? We literally have this gap, okay? And guys, with gaps, you should always know that gaps never always fill, but they tend to sometimes fill. And they also tend to have these fake moves into the gap fills, and then boom, they sell it really aggressively right back down the opposite way, which is very important to notice all these moves. And actually, this is what exactly happened on this day. You can see in the pre-market hours, we're recreating this little bit of a triangle right here, right? And then look at this. At the open, we ran up. At the open, we ran up, and we tried to, we try to go into that gap, and we try to gap fill, but look what happened, right? We didn't even go halfway. We maybe went, like 1/4 or 1/3 of the way to the gap fill, and look what happened. Sellers started stepping in right here, So look, you can see that sellers started stepping in right here, and then look what happens when they continue to step in. Look, we got this very big red candle body stick right here. Now, guys, there's one thing to know is that with candlesticks, when they usually leave like a wick, like let's say, for example, so let's say this candlestick had like a wick like that, right? Usually, or no, actually here, let's say this candlestick had, like a very long wick like that, right? Usually when they have a long wick, or like when it doesn't just look like, like a full body candlestick like this, it's not as strong. Okay, so keep in mind, guys, that these are the strongest candlesticks, which means that this move was very strong and it's likely to continue. And now, also, it's likely to continue because this is an engulfing candlestick, right? So this pretty much engulfed all of this movement right up here in just one candlestick from the other 4 candlesticks. Okay, so look, what happened on this trade is that, look, let's say you wanted to go long on this trade, right? Let's say let's say, you know, you drew like a triangle shape like that, right? And then, you know, so above the breakout on this triangle, you would get in for calls, right? Look what happens when you get in for calls. Okay, so look, let's say you get in for calls on this yellow candlestick, right? Because we broke that structure right there, right? We broke that trend line. Look what happened when you get into calls on this candlestick right here. Look, it would maybe go in your way for maybe about, you know, like 20 to 50 cents right there. And then look what happened. Tesla would sell back down. And then, of course, you'd be right in your position. And you'd probably get stopped out somewhere down here. Or maybe even further, right? So one way to notice fake breakouts is to just understand the candlesticks like we talked about before. Okay, now let's look at this, right? So look, let's delete these arrows for a second right here. And now let's understand. So look, you see this yellow candlestick push up. Okay, guys, so just imagine the yellows are greens and imagine the red are reds, right? So look at this. You see we broke out above this trend line. Boom. So look, boom. So if you were to get into calls right here, and then look, your stop loss should be somewhere around either here for a fact, right? So for a fact, this is like your lowest stop loss right here, right? So this is your furthest stop loss, or you could have a better stop loss if the stock ended up breaking that bottom trend line, right? So like what I mean is this. Look at this. Look at this. So we see the trend lines right here, right? So look, your stop losses should be to identify, okay, so what if this could be a fake breakout and then boom, you know, so we get the real move back down. Okay, so where's my stop loss going to be, right? So you can have many different stop losses, right? In my opinion, the most safest stop loss is the best stop loss, but it's also going to stop you out very quickly, which is right here. Okay, so which is on this top trend line again. So, okay, so what I mean is that, look, if the stock pulls back and breaks this top trend line, then you get to stop out right there. Or if you want, you can move. Or if you want, you can give yourself a little bit more risk, and you can move your stop loss to the bottom trend line. And then if it breaks that, then you stop out. Usually when it breaks the bottom trend line, that means like that is the real move, and that, you know, it could come back down and continue the opposite way that you want it to go. Okay, so, but likely, usually when stocks have a fake breakout, they will actually pass both of these trend lines, and then they'll just continue in the opposite way that it was originally. But look at this. When they usually have a real move, what would usually happen is this. Look. So we'd break out of this top trend line right here. Okay, so look, we get the breakout right here. Boom. And then usually what would happen is that we would come back down and then we would retest this area, right? So look at this. Okay. Stock moves up right there. Pull back down, retest this trend line, and then boom. And then move. We move back up into there, right? So what this is called a break and retest, and then the continuation, right? This is called a break and retest strategy. Or sometimes this also happens, you know, so you can kind of see something like this, right? So here, let's remove all this. Look at this. You'll see sometimes this happen often. So look, what will happen is that, look, the stock will actually break out, and it'll still do a break and retest, but like it'll break and retest maybe like this bottom trend line right here, right? Hold a little bit, and then boom, we'll continue up back to the upside right there, right? Or what could also happen is something like this. Look, we do a break and retest right here, right? And then look at this. We hold under this trend line, and then what happens is that, look, because we're holding under it, we are showing some selling pressure, and then boom, we end up continuing to the downside right there. Okay, yeah, so basically, the only way that you couldn't have got stopped out right here if you took calls today is to either, one, get a good entry on this trade, or two, have your stop loss just like a regular stop loss, and then, you know, and you get stopped out. But look, so the first way you could have done it is, let me think. Okay, so the first way you could have done it is called the break and retest, and this is really getting a better entry. Okay, look, this 195.7 level right here I marked this down because we see a low right here, right? So look, that will be later used into support later. Look what happens on this triangle break, right? We break down, push back up, and then push back down, and then look, we hit this level right here, and then look what happens. We hold this level of support, and then we go up, right? So look, you would have known this level of support, and then you would have took a chance, and then gotten the calls right here, and then boom, you would get a move from 195.70 all the way up to about 198.30, right? Which is almost a $3 move. Now, guys, on options, that would have moved like 35%, maybe 40%. So that's one way that you could actually nail this trade, right? But the other way is just, it's just blindly entering right after the breakout, which is not a good enter, right? So look, that would mean that you enter right here, right? That would mean that you enter right here on this candlestick right here, and then look at this. You have just 50 cents for the high, and then look how much risk you have down here, right? So honestly, guys, sometimes it's better to get in early, right? Because you have a low risk, but you might get stopped out first. Okay, that's okay, right? Because you have low risk, and then your reward is so high. But look what happens if you enter up here, right? Your risk to reward instantly becomes so crap. I mean, look at this. Your risk is this whole potential downside back to this support level, right? Which is almost $3. And then look how much your reward is. Well, here we only went above 50 cents. So really, sometimes it's good to enter early rather than on the breakout. And actually, you can still enter on the breakout and make money, but you should practice the break and retest method, which really will save your ass all the time. Sorry, excuse my language, but okay, check this out. Okay, the next example is this right here, right? Okay, we can see in the pre-market hours, well, look at this. We're making this downward channel, and then look, we're just channeling, right? We're just going sideways, but we're also going in the down. We're also going in the direction of down, right? So look, honestly, right here, guys, when stuff like this happens, well, look, when things like this happen, when you just start getting, like a big push, like a very fast run up, honestly, there's nothing really you can do about it, right? You can do two things. You can either chase, get in, or you could sit out and just wait for the next opportunity. And now, we all know as traders, you always want to sit out and wait for the next opportunity. That's the best thing to do. Okay, but so look, for example, this wouldn't be the best case scenario, but here, look. Let's say, for example, you did actually wait for this whole move to finish, and then you would have caught, maybe some action up here, right? So look what could have happened. Look, looking at the previous day, look, we used that gap fill as a resistance area, and then look what happened. Look, we moved up into this gap area, and look, we caught resistance at the same area from yesterday, which is right here, this level, and look what happened. We broke above it for a few minutes, and look, we couldn't continue back to the upside, right? So the way you would know it would continue is by the stock doing what's called a break and retest. Okay, so which would be this. Look, break above, retest, which was right here, and then it would continue to the upside. But that didn't happen, right? What happened is that we actually broke above, retested it, and then we pulled back down into that level, and then we held it right there, and we kind of made a flag like that. And then boom, we continue the downside right there. Okay, so that's one way that you could have got a good entry on that day, even if you missed the move, is just by finding support and resistance levels, right? I mean, look, you could draw this out all the way to here, and look at this. You can see that we rejected the same level. Boom. So you would have waited till this whole $8 move right there, and then you would have took puts. Not at the top, because that's, that's unpredictable, but like you would have took puts right here at this 198.40 level, and then your stop loss would have been this gap fill, which is 199.50, which is about $1.50, right? And then look how about your risk to reward. Look, your risk is $1.50, and then your reward is potentially all the way down here. Now, let's be conservative. Not all the way down here. Maybe let's say, like 194, right? So look at that. You're risking about $1.50 to the upside, all the way for your potential reward for more than $4. So guys, that's one way that you could have caught that trade even without like FOMOing. So guys, again, this video is going to be pretty long, but that's okay, because you're learning very good stuff that no one ever teaches you here, right? Because the one thing is to find the fake moves and just avoid them. Okay, so check this out. Look, so here, this was something a little bit different today, right? Here, this is called a break and retest and continuation to the downside. Okay, so now this is actually very, very good. Okay, so this is something that I always use in my trading, which really works. Look at this. In the pre-market hours, we're forming this triangle pennant right here. Okay, so, and then look at this. We broke to the downside a little bit in the pre-market hours, and then we continued down a little bit, and look what happened. We pulled back up into this area right here, and we pretty much tapped this top trend line, and look what happened. We rejected it and we retested it, and the seller started pushing down very, very hard and aggressively, and then we got to sell back down to the previous lows. Okay, so remember what we said, not all the time it's going to continue, but we'll still get that rejection. So look, okay, look what happened here. We did a breakdown, retest back up, and then we continued back down like that. So guys, look at this. I want to just let you know, look at this. Again, let's kind of go over how you could have entered on this trade. So look at this. So you could see that right away in the pre-market, we already broke that trend line, right? We already broke this trend line right here. So look, let's say you bought puts, right at the open, right? Because you just believe that it would have gone down. So look, you wouldn't have entered somewhere. Okay, look, you would have entered somewhere maybe, like right around here. And then look where your risk is. Your risk could be all the way, if Tesla continues up, 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 and breaks this trend line back up into here, which could be, like a $3 risk or maybe $2 risk. And then look at your downside. From 194, where you entered, all the way down to 191.5. So look, your risk to reward is kind of the same, or if not, your risk is a little bit greater, because you're not going to get the entry here that's the best at the open, right? Because this just moved down right away. So look at this. Here, you don't have that much good risk to reward if you just enter right away after the trade breaks out. But look what happens when you practice the break and retest method. Look at this. You wait for the stock. Look at this. You wait for the stock to break out. Okay, look at this. You sit patient for the next, maybe 30 minutes to 1 hour. And look what happens. We break down from that pattern, retest up here, and then we get that nice sell-off. And guys, look at the sell-off compared to this buy-up. I mean, look at this. There's pretty much, just all selling right here. Maybe a little bit of buybacks, but not much. So look at this. Let's be realistic. Look, for the break and retest, let's say you waited for Tesla to come back and retest this low right here, which is where? 195, right? So look, right here, you would see some rejection around 195 right here on this red candlestick. And look, you would enter into puts right here. And then your stop loss would just be if Tesla broke above this trend line and continued up, right? So basically, look, let's say your stop loss was around, well, look, you enter in at 195, and then so your stop loss would just be if Tesla held above this previous high right here, right, which is 195.70, and if it kind of continued, right? So look at that. Your stop loss is from 195, maybe let's just say like a little bit above the trend line, which is to 195.70. Here, look, let's just say, yeah, okay, so right here, okay, let's say about 70 cents to $1. Okay, so let's just say $1 stop loss. Now look at this. Your reward is potentially all the way back down to the bottom of this right here, right? So, of course, not all the time it's going to continue, so we're just going to say the bottom to be conservative, okay? So look at this. From 195 to the bottom, which is to 191, that's a $4 move, guys. That's a $4 move. And so here you have $4 risk to reward for the $1 stop loss. Okay, so again, practice the break and retest strategy, guys. Remember, the break and retest strategy is where a stock breaks a certain level or trend line and it moves back into that direction and it retests that breakout area and then it continues back to the original side that it was breaking out. Okay, so this is something to just keep in mind and to always watch. Okay, so now look at this. Let's go back into the next day. Okay, so let's go to the next day and see what kind of example we can give. Okay, look at this. Actually, guys, this is the last example, and this is a very good example. Look at this. We can see that Tesla is forming this channel pattern right here. And look, we're kind of channeling to the upside. And guys, usually, well, actually, not all the time, you know, so if we're channeling to the upside, not all the time are we going to get a continuation to the upside, right? So like this could break down, or this could break up, or it can keep going sideways. Okay, so look at this. This is a very good example of a fake breakout. Look, right here, you can see that we actually had a fake breakout right here, right? Look at this. We broke above this trend line right here, and look, let's say you got into calls right here, which is around 196.80, and then you go up to 197.60, which was the top. That's not even a dollar move, guys. So look, if you entered into calls right here, right, you would have got stopped out because this fake breakout would have pulled all the way back down, even far past the open, which was right here, right? So look, and this was on a Friday, guys, so your options would have been toast. But check this out, right? So if you entered right here, your risk to reward would be very crap. And this is what I mean, you know, so like your reward was, you know, was this much, and then your risk could possibly be, you know, like this much, you know. So here, look, check this out. This is your reward and this is your risk. Why this much? Because at the open we moved to this bottom level right here. So look at this. This is your reward, and then the pink box is your risk, right? So reward to risk. Is that a good risk to reward? No, it's not. Okay, so let's look. We got to find entries where we can get good risk to reward, okay? And that's by using the break and retest strategy. Guys, I promise you that this is always going to work. Now look, there's two scenarios, right? So, okay, one, we would have done this. Okay, so look, if you were to take calls, you could have done this. Okay, but first of all, guys, remember what we said earlier. Always have as many trend lines as you can on your chart so you always get the best entry. Okay, so look at this. There's a reason why I just drew this trend line right here, right? Because this was a key factor going into today from yesterday. Look at this. We used it about, you know, four or five times, right? Here, here, here. Not really here, but here at the open. Okay, so look at this. So now we got this trend line in place, right? So what happened here is that, look, when Tesla opened, we moved back down to this trend line and we held it as support right there. And look, as you can tell, we ended up shooting up to the upside. Okay, so what happened, right? So buyers found this as a support. And so guys, what happens is that, look at this, right? So in this sideways channel right here, we broke to the downside. Okay, so now we got that breakdown. And then look what happens. Look, we broke to the downside. And then, you know, so kind of moved back and forth a little bit within that 1 minute. And look what happens. We ended up retesting this certain trend line right here. And then we moved back to the upside. Okay, so look, this is a little bit of a different way you could do it. But look, you could have just realized this. Okay, so this trend line support, this is the previous channel that we just broke out of, right? Look right here. We just broke down from that channel, and then look where we head to. We head down and retest the support trend line, and then right here you would have tried to grab calls, Of course, this moved really fast, but it's okay if you maybe chased it a little bit, but don't chase it too much where you already see the stock move up $2. Okay, so look, here you would answer calls, and then look at this. Your risk, well, look, let's be honest. Your risk would be anywhere below this level, right? Because here is support. So let's just say your risk was maybe about 70 cents to $1. Okay, so let's say $1. Okay, so right here you're risking about $1. Okay, $1 right there. Oh, sorry, actually let's make that a little bit shorter because that's not $1. Okay, right here you're risking about $1. And then guys, listen, your reward would have been all the way to that upside right there, right? This would have been your reward. Okay, so let's make that green so we actually know, right? So look at this. Your risk to reward. Okay, and then look at this. We did get this fake out right here, but guys, well, if you're not taking profit after that $3 movement, you just can't be greedy, okay? So after that, guys, you know, we kind of looked about 5 examples right there, guys, and these are really good examples. These are daily examples that you are going to see every day. And, you know, guys, remember, every example will look different from every day when you're trading. But the key thing to know is just understand the levels, understand the price action, and be able to read the candlesticks. Now, guys, this is really easy, and we know anyone can do it. You just have to believe. So look at this. Guys, practice the break and retest strategy. Okay, so this is what can happen. Look at this. The stock is trading right here. Okay, so in between, boom. And then what happens, look, we get a breakdown, and this is what happens, right? So look, we break down, we retest at that breakout area, and look what happens. If we reject like this, right, right? So look at this. If we reject, you know, like something like that, maybe a triple top, and then boom, we can possibly continue. If not, we may not continue, and we might actually go right back down to the previous lows, and then we might go back up into there, right? So look, this is called the break, the retest, and the continuation. So guys, this is one thing that I would definitely study if I were you. Now guys, if you like this kind of video, yes, it was kind of long, but that's okay because you are learning valuable information here. Now guys, if you guys do want to see, you know, other kind of videos like this, leave a comment below on what you want to see. Okay, leave a comment below on what kind of video ideas you guys want to see. And guys, remember, we have a free group in the link in the bio, or I'm sorry, in the link of the description and the comment section. And if you guys want to join, we will see you there, guys.